the president of WOWzer Technologies, and today I want to share with you part 2 of our 5-part video series. And today I'm going to be talking about how to plan for growth. You know, in business, one of the key things that we always want to do is grow. And I will say it again as I said it in the last video, and that is, what are you doing on a daily basis to improve 1% in every single area that you're working in? That's really what it takes as well. I'm going to cover some things today, the way you could actually utilize that concept and therefore show some incredible growth over a short period of time. And the reason I said this is because of the things that are available to us today that were not available in the past. Okay, so the first thing that you want to know, in my opinion, is what is your starting position? How do you know your starting position? Well, if you look at your financial statements, the one financial statement you need to really pay close attention to is one that's called the balance sheet. Okay, the balance sheet is simply a moment in time, and that's what it has. It has a date as of a moment in time. That it shows you where you are, and on it are 3 main areas. The first area is what we call your assets. And what are assets? Our assets are things or are items on your balance sheet that you own. For example, a bank account, a building, furniture and equipment, land, buildings, these kinds of things, inventory. These are items that you have purchased and you have ownership of them. So that's what an asset is. Then from that, you subtract what's known as a liability. What is a liability? These are items that you actually have an outstanding obligation to. For example, credit cards. So how big are your credit cards? What's on your credit cards? Accounts payable. What is an accounts payable? An accounts payable is an item, on your balance sheet that a vendor sends you an invoice, and therefore it is payable. It is an account or accounts, plural, more than one, that you owe payable to. Mortgages is another example of a liability. Loans, lines of credit. So you have your assets, what you own, minus what you owe, which is your liability, equals what we call equity. So the difference between the two is how much you really have in your business that, if you sold everything, that's how much you would have in your possession, called owner's equity, and that is the position that you're in. Why is that so important? The real reason to know where you're at is it doesn't matter where you are, but if you don't know where you are, you're basically lost. It's no different than you being out somewhere and you've lost yourself. What do you want to know? You want to know where you are. Well, you want to know financially where you are, and the balance sheet tells you where you are, even though it's just a moment in time. It's very important to know where you are. And then once you get there, is to keep it going and looking at it on a continual basis. Again, that's that 1%. First, you got to know where you are. There's your 1% right there. Second is knowing where you are on a continual basis. That's your 1%. Because you know what? In a lot of cases, I find a lot of clients, and I've done this myself, I don't know where I'm at. And therefore, how can you make decisions to grow if you don't know where you're at? The second thing that I want to talk about is pricing your products or services for maximum profit. Now, how do you do that? Well, if you have a product or service, you've got to know what your costs or associated costs are with that item. That's the first place you start. So how can you price a product when you don't know what it costs you? Now, in cost accounting, which I was a cost accountant for many years, that is one of the things that I did. And I worked for industry in the meat business, and we knew what the cost of every item was, and right down to the penny. And that included, for example, we were in the meat industry, I could tell you what a 4-ounce steak would cost as opposed to a 5-ounce steak would cost. And I could tell you at different times of the year, because different times of the year, it was seasonal. Think about it. Steaks are more popular when? In the summer as opposed to winter. So therefore, in the summer, they would be cost higher than they would be in the winter. So if you use the same price across the whole year, well, that would not be indicative of what your costs are, and therefore you really are not maximizing your profit here. And which is what I talked about. So cost accounting takes into account the raw material of the item, in the case that I gave you, the actual steak itself, any delivery costs that are associated with it as well, because you cannot have that item unless it's delivered to you, so you'd have those on as well. And in some cases, we bought from the United States, there would be the exchange as well. We'd have to put the exchange in there, and it fluctuates up and down, okay? The other thing that you'd also have to take into account is your actual labor. So in other words, an actual New York steak didn't come as a New York steak. It came as a thing called a New York strip loin. It had to be cut down. So therefore there was labor associated with it and waste associated with it. So you had to take those things into account as well. And shrinkage as well, if you lose things. And that also depends on the type of product or service that you're working with, all right? And then also your overhead. Well, you know what? We were in a building. We had other employees, administration. We had vehicles as well, so a percentage of that was into the cost. Then we calculated what the actual cost was. So if you think about it, in most items you have what? You have the raw material plus anything that to bring that raw material in, labor and overhead. And from there, you look at and say, okay, what am I going to sell it at? You have to have what? A markup, right? Because if you don't have a markup, you're not making any money. And that's how you actually take your products and you price them properly for maximum profit. And you should do that for every single item. Now, does that mean that in every single item you're going to charge a greater margin than other ones? No, it depends. You should also look and see which ones are moving, which ones are not moving. Because if they're not moving, why do you have them? A service, if it's not a service that customers want, why are you offering it? You want to also base your products and services on what the customer wants, because at the end of the day, unless the customer wants it and pays for it willingly, you don't have a product or service that's moving, and you may not have a business. The third thing I want to talk about is, what is your plan? What kind of a plan do you have in place to grow? When you're a small business person, and I've experienced this as well, we rely more on word of mouth, and that only gets us so far. But today, we have technology that can really truly help us, okay? Especially in our marketing efforts. I'm gonna give you a story about an uncle of mine who's passed away, and he came from Italy and he went to Brazil. And in Brazil, he actually did extremely well. So it doesn't matter where you are, if you use the principles that he used, and he would say, nephew, I said, uncle, how did you get to where you're at? And here's the story that he told me. He says, that when he came to Brazil, he knew that if he worked hard, he would make money. So one of the key principles is you need to work hard, but that's just not enough. You have to be strategic. What did he do? He was in the textile industry, and what he did is he went out there and he was basically a door-to-door salesman for a period of time. But then he realized that only got him so far. He maxed out. And he had one principle that he would always make sure that he would do. That was his own principle, that whatever items he bought, he would sell, by the end of the day, no matter how long he was out there. So therefore, he was willing to pay the price. That's your 1% right there. Are you willing to pay the price to, to get your product out there, to market it properly and know where you're at? That's really important, okay? So then what also he realized is he was maxed. But he did what? He developed relationships around him, another 1%, and he became friends with them. And he decided to open up a little shop, and he created a deal with them that did what? That allowed them to sell his products. So now he wasn't the only person selling his items, someone else was. And then from there he realized he could make his own products, and therefore he would increase his margins. Where am I going with this? That's back in the past, but today what you have that a lot of people don't realize is you have what? Technology. So your marketing efforts, if you think about it, he was marketing himself through other individuals, but now your marketing efforts are digital, which is hugely important because you can gain a greater market share by making yourself noticeable in your environment, whatever your environment is. In our case, we're in the bookkeeping business. So therefore, our goal is to do what? Is to find those individuals who would want our service because it perform something for them. In other words, we're targeting those individuals who need it and want it. That is the power that you have right there. That has to be a plan, and your marketing efforts have to be aligned with that as well. So if you don't take that into account, you're missing out. And that's another 1%. Think about your marketing efforts. And the last thing that I'm going to talk about today is, and I briefly touched on it, is technology. Technology now does what my uncle could not do back in the past, and that is actually, literally, depending on what you work on, the type of product or service that you have, it can be worldwide. Never has there been a time where you could actually be in a position where you could become global faster than you ever thought possible. And technology today makes that happen because the costs are not prohibitive like it was in the past. To become global, I mean, what would it take in the past? But today, you have all kinds of social media that you can utilize, all kinds of apps, all kinds of strategies as well, and the world is your oyster. We, in our situation at WOWzer, what are we doing? We're creating a revolutionary movement by providing your small business with an automated, paperless bookkeeping system where you have your key metrics on a daily basis on the palm of your hand, and that is your cell phone. Would that have been possible 20 years ago? No. But today, with technology, it is possible. So if it's possible for us, what is possible for you? Another 1% is, don't think it's not possible. Ask yourself, what is possible? When you ask those questions, the answers come. So in summary, what are the 4 points that I covered today in order to grow your business? And the first one is knowing where you are, and knowing where you are is with your balance sheet. The second one is, how do you price your products and services for maximum profit? Cost accounting. Know the costs of your items so you could actually price them accordingly and make a profit, and also know which ones you may want to eliminate. The third one is, what is your plan? Do you have a plan? If you don't have a plan, how are you going to get there? My uncle's plan was what? His plan was to get to know others and know his customers and provide them the goods and services. What is yours? Are you using a marketing strategy? That was his marketing strategy. What's your marketing strategy? Are you using the technology that's around you, such as social media? How many millions of people are on that? From where in the world? And the fourth one, which I touched on, is technology. Technology today can make you a global powerhouse if you want to be. That's all it takes. And I'm going to talk more starting on part 3, 4, and 5. But starting in part 3, I'm actually going to talk about technology and how it can actually help you by knowing your numbers. That will be the next. Episode. And I hope you'll join us. And if you have any questions about anything, reach out to me. I'll be happy to answer these questions for you. And I look forward to hearing from you soon. God bless, and ciao for now.